Will investors feel more retail pain? Joining us now, Mark Heppenstall, Chief Investment Officer at Penn Mutual Asset Management. Hey, Mark.
Hello there.
I have to ask you, what exactly is going on with the retail sector? Honestly, I go to the shopping mall and it is packed. Where are we shopping?
Well, I think a lot of the pain that is going on in the retail sector can really be summed up in one word, and that's Amazon. There's been, a significant shift in the way consumers are buying much of what they purchase today. So I think that's been a big driver. And even though if you go to certain malls that are full of foot traffic and a lot of shopping going on, there are a lot of other malls that are really struggling. So, wherever you are probably is a sign that the mall you're going to is probably a pretty good one.
I'm popular. I go to the cool places. No, I'm kidding.
Exactly.
Mark, so we saw some records for some of the big names yesterday. We heard Buffett is investing in Southwest and American Airlines. Snap has some investors. Where are you putting your money? Where do you think the money should go now to make some money this year?
Well, we like home builders and financials. Both of those sectors we think are still relatively early to middle innings, and we are pretty much late innings, I would say, for the market rally overall. But I think if you pick certain sectors of the market that we think still have room to run, and home builders and financials, we think are both going to benefit from some of the new economic policies that are eventually going to be implemented under the Trump administration. The pace of these changes and policy changes under Trump have been slower than many had expected when he was first elected, but we still think that's going to happen eventually, and those sectors are going to benefit.
How closely are you watching the yield on the 10-year Treasury, and what exactly is that telling you about the market?
Well, the Treasury market and the equity markets have been telling different stories. A lot of investors have been expecting interest rates to increase this year. They're actually a bit lower on the 10-year Treasury on a year-to-date basis. So there was a big move following the election, higher in interest rates, and we've really sort of settled into a range so far in 2017. And the inflation readings have been coming down a bit. We think that's temporary. We think inflation is going to be pushing higher as the year progresses, and we think it's going to take 10-year Treasury yields higher. So we think a moderate increase in Treasury rates, probably the 10-year ending the year around 3%.
3%. Got it. Mark, good to see you.
Thanks, Mark.
All right. Thanks for having me.